Hey everybody, welcome back to the channel. My name is Justin and I'm giving you guys another update on my portfolio, how it's performed so far this year against the S&P 500. So this is January through September 2023, and the reason why I picked S&P 500 to kind of use as a benchmark is I can go out to the market and buy an EFT that mimics S&P 500. For example, VOO, which is a Vanguard EFT. And if I can't beat the S&P 500 on my own, picking individual stocks, it makes no sense to continue to do so. I'd rather just buy into an EFT and just let it do its thing long term. So I try to provide transparency on this channel. I provide even more transparency on my Patreon and kind of give updates on buys and sells as well on there. But at least on the YouTube channel, I do periodically show my portfolio and kind of give you guys an update on kind of where it's at year to date. And September specifically was rough for the market. It was rough on the portfolio. September S&P 500 dropped about 5%. So the market across the board was just really bad in September overall. And the portfolio itself actually dropped about 9% in September. I think it was the worst performing month so far this year in the portfolio. However, my portfolio is up almost 31% year to date versus S&P 500, which is up around 13% year to date. So year to date, S&P 500 is actually doing quite well, up 13%. Fortunate enough that the portfolio is actually doing really well, even more than double the S&P 500 so far this year at 31%. And I'll throw a graph up on a video right now and kind of show you guys kind of a month to month on kind of where it's kind of been so far this year. So you can see January, June, and July are really my best months so far this year. I had some really nice winners earlier in the year, from Carvana to Netflix, home builder stocks. And so I took advantage of those and selling those at a really a good price. And I was able to get some really, really nice gains from those overall. Now, certainly some of the months have done worse than S&P 500, and that's going to happen. Again, this is kind of a long-term view for me. I'm a long-term investor. I'm a value investor, so I try to buy stocks with good value, hold them for a while. Hopefully they go above the intrinsic value and then sell. And if you don't know how to value stocks, it's one of the most important pieces on evaluating companies just in general. I actually show and give you guys templates on my Patreon. If you're interested, I'll put a link down below there. But let's just jump right into the portfolio and take a look at my current holdings and kind of where they have been so far since I have bought them. Okay, so you should see my portfolio on the screen right now. Currently have 18 positions in my portfolio. The top 6 positions in my portfolio represent about 50% of my overall portfolio. So those are my highest conviction stocks that I believe in right now. I do have 2 new positions in my portfolio since my last video here, and that is Academy Sports and Outdoors, ticker symbol ASO, and Raytheon Technologies, ticker symbol RTX. And the reason why I bought those 2 positions, we'll first start with Academy Sports and Outdoors. So this stock, or this company, really reminds me a lot of Walmart, but it's geared towards the sports and outdoors. So think of hunting, fishing, guns. You can also buy, baseball, football, cardio equipment. They have the whole gambit there. Their stores are more like warehouses, very similar to Walmart, about 70,000 square feet. So they're not small, say like a Big Five sporting goods store. They're very, very large, more like a Dick's Sporting type company, but it has more of a warehouse type feeling. 85% of their selling space, or at least 85% of their space in their stores, are selling merchandise. So only 15% of their stores you can walk around and it's kind of open. So they pack a lot of stuff in a very large area, 70,000 square foot type warehouse type stores. But what I also like about them is that they not only offer a high variety of type items in their store, but they also provide it at very, very good value. And that, again, that's why it reminds me of Walmart. Unlike Walmart, Academy Sports and Outdoors has operating margins that are very, very impressive. I mean, Walmart's going to have low single digits, 3-4% 12% type margins on the bottom line, where Academy Sports and Outdoors, the operating margins are in that 11 to 12% range. And I think they can grow up to potentially 14% long term. So the second one on the list here that I bought recently was Raytheon Technologies, ticker symbol RTX. Now, I worked for Raytheon for quite a while. My background is accounting and finance in this government subcontracting space. So I do feel that I understand Raytheon and the industry very, very well. Since June, Raytheon stock has collapsed. I mean, it's gone from almost $100 a share down to about $70 a share here today. And they have three segments of their business. So they have Pratt & Whitney, they have Collins Aerospace, and they have Raytheon. Raytheon actually merged with United Technologies a couple of years ago. And even though they held that Raytheon name, it's really United Technologies that took over the business. But with Raytheon, they announced in June their Pratt & Whitney segment of their business, which makes engines for Airbus and Boeing primarily, had a defect on their powder coating on the metal parts of the engine. So they needed to go look at those engines. So a lot of the planes had to be grounded, and it's going to cost them about $3.5 billion of impairment that we're going to see for the upcoming quarter, which is obviously not a good thing, and the stock has collapsed because of that. I do think that is short-term in nature, and I do think it's a company that's going to do very, very well long-term. So that's why I bought into them. And if you're curious, I do offer on my Patreon as well what I think the intrinsic value of each of these stocks are. So if you're interested, go check that out. I'll put a link down below. But stocks that really didn't perform well during the month of September was Dollar General, ticker symbol DG. It dropped about 20%. Stanley Black & Decker, that one dropped around 14%. So those stocks really didn't do well overall. Stocks in my current portfolio that performed well so far since I bought them. My best one is Great Lakes Dredge. I'm up 40% on that one here. Wix.com, I'm up 25%. Trupanion, I'm up 22%. The worst performing stock so far in my current portfolio, you can see Baxter International is down about 19%. Advanced Auto Parts is down around 18%. And then Paramount is down 14%. And Dollar General is down about 17%. So there's a few of them that are not performing really well right now. But I do have conviction with these stocks that they will do well long term. So that was my portfolio in a nutshell so far this year. Again, I'm up around 31% year to date versus S&P 500, which is up around 13%. Now, I do want to talk a little bit how I structure my portfolio and kind of my mindset there. One of the best books I've ever read is right behind me, and that is The Most Important Thing by Howard Marks. If you have not read that book, highly recommend it. Like I said earlier in this video, I am a value investor. He is as well. And his whole book is really structured and predicated around risk. He stresses having a low risk portfolio. He thinks that is the best way to build wealth over time. And that is a mindset I have taken personally and how I structure my portfolio. And if you look at my highest conviction stocks in my portfolio, so those top 6 that represent 50% of my portfolio, I actually think all those are fairly low risk. And any stock you buy is going to have some sort of risk involved with it. But I don't think any of those stocks are going to drop 50% in the next year. Could they? I guess they could if the whole market drops 50%. But in general, I don't think I'm going to have 70% losses in those stocks. So that is going to mitigate my risk. Or on the other hand, I do think I have a long runway with a lot of those stocks potentially even doubling over the next 3, 4, or 5 years. So when I'm buying into a stock, I'll put more money into it. I think it has a higher margin of safety. Or if I feel that I can really forecast the stock and the stock price going out into the future. And that's, in my personal view, is looking at operating earnings and then projecting it out and then discounting it back today on a discount rate, and then also what I think the market is going to pay on a multiple overall. So that's kind of more of how I structure my portfolio and kind of what I'm looking for. But but I'm trying to find stocks where overall my portfolio, if the stock market goes up, say, 20%, hopefully my portfolio kind of keeps up with that. But if the stock market falls 25%, hopefully my portfolio only falls like maybe 15% overall. So that's kind of how my mindset is and how I'm kind of structuring it, especially going forward. But I'd love to hear from you guys in the comment section. What do you think about my portfolio right now? Do you own any of the stocks? I read every single comment down there. Thank you so much for watching. If you haven't already, hit that like button on the way out. I'll see you in the next video. Take care and God bless.